Yeah, just another second, I think.
Yeah.
Yeah, we're live, Omkar. Hi,
Right.
and welcome to the Road to Metamorphosis.
Hi, Anupam.
One more
Thanks.
comment. Yeah, thank you so much for joining us. Hi, everyone. Omkar is market reporter at Coindesk. He will be talking about the COVID situation and how the world is looking at it. We are already getting so many applause. That's great. I'll hand it over to you, Omkar.
Yeah. So I'll start with giving a brief introduction about myself. My name is Omkar Godbole, and I'm a market reporter for Coindesk. I've been writing articles on Bitcoin, price action, derivatives, on-chain stuff uh, since September 2017. Prior to that, I was working with Sher Khan here in India as a currency analyst, and I've also worked as a derivative analyst before. Uh, and So yeah, it's a great time to be in cryptocurrency industry right now, and I would really like to thank Anupam for conducting this event. Also, Coindesk consensus distributed is scheduled for next week. Usually, the event is held in New York, and but this time, due to the COVID situation, it's a free event, and it's an online thing. And there are more than 5,000 attendees and more than 100 speakers, and it's a 5-day long event. And the number of people that are going to be there, it's quite big. We have guests like former U.S. Treasury Secretary Larry Summers and CEOs of major exchanges. So it's going to be a great event, and do tune in. It starts from Monday, and it will end on Friday.
Perfect. This is going to be an interview kind of a session. I'm going to ask some questions, hopefully some tough questions, Omkar. Put you on the spot. I'm just kidding. I will not do that. Uh, so for the longest time, gold and commodities have been considered as a safe haven and a safe asset for normal people or like general people to invest in who don't want to go to the stock market and risk their savings and everything. And now, in the past 10 years, we have Bitcoin. I just want to see like what's your opinion on having some kind of a safe haven asset, and how Bitcoin and other cryptocurrencies play a role, and why people like general people should pay any kind of interest to it.
Okay, so the first thing that we need to know is what exactly is a safe haven asset. So as the name suggests, safe haven is anything that will either hold its value or will appreciate during times of stress in the global economy or any domestic economy as well. So over the years, there are a couple of assets who have built a strong reputation as safe havens. Most of us are aware that gold is a safe haven asset, and then you also have usually government bonds also perform well during times of stress. U.S. Treasury bonds are one of the safest assets. Uh, then in currency markets, you have Japanese yen or Swiss franc. These are the currencies that usually go up when there is turmoil.
Yeah.
Now we also have like most crypto market analysts think that Bitcoin is also a safe haven asset. And in fact, since its inception, Bitcoin has been consistently compared with gold. The logic being Bitcoin supply is capped at 21 million, and its monetary policy, Bitcoin's monetary policy is in a way deflationary in nature, in a sense that every 4 years its supply pace of supply expansion is reduced by half. So that's essentially the mining reward halving that we are talking about, which is due to happen in next 2 days. And so there is a widespread belief that gold, just like gold, Bitcoin is also a safe haven asset. But if you look at the past 10 years data, there is no credible evidence that Bitcoin tends to move in line with gold, or Bitcoin is largely an uncorrelated asset still. In fact, uh, ever since the COVID crisis began in the last week of February, stock markets started falling, and Bitcoin also fell along with stocks. In fact, from 10,000 to around, it came down to 3,800 in the first 2 weeks of March. During the same time frame, US stocks, Indian stocks, almost global stock markets also fell. So looking at the past data, it doesn't appear that Bitcoin is a safe haven. However, most analysts believe that eventually it will take up the role of a safe haven asset, and there is a strong reason to expect that. There are two reasons for that. First is, on one hand, we have major central banks across the globe pumping unbelievable amounts of liquidity into the system. So here you have fiat currencies whose supply is increasing. On the other hand, you have Bitcoin whose supply is rising but at a slower rate. So after Tuesday, the rewards per block mine will drop from 12.5 BTC to 6.25 BTC. So essentially, less supply will come into the ecosystem. So what we have is a divergent monetary policy path. On one hand, we have fiat currencies whose supply is increasing. On the other hand, we have Bitcoin whose supply is increasing but at a slower rate. So that is a strong reason why most people believe that Bitcoin will become a safe haven. Secondly, there is a shortage of safe haven assets in the global economy today. Over the last 7 or 8 weeks, it's only the US dollar that has emerged as a safe haven. Even gold took a beating in the first 2 weeks of March. And since then, it has recovered. Right now, it's the US dollar and US treasuries which are the safe haven assets. And even Japanese yen or Swiss franc, traditionally in foreign exchange markets, the traditional definition of safe haven was the currency which is backed by current account surplus and whose central bank is running a zero interest rate policy. In a simple terms, interest rates are at zero. However, now over the last 10 years or so, and more so in the last maybe 2 months, interest rates across the globe, right from New Zealand to, let's say, Canada, everywhere interest rates have gone down to zero. So now there is no, like, every currency has become a safe haven. So essentially there is no safe haven left. The only safe haven that we have now is US dollar because it's a global reserve currency and US treasuries. So that is another reason why I think that people are on the lookout for more safe havens, and Bitcoin fits the bill. And last reason, which is sort of a macro thing, is the very fact that interest rates are below zero across the advanced world suggests that the financial system is due for an overhaul. Because the whole idea of negative interest doesn't sound logical. Like, I am lending someone money, at the same time also paying him money to borrow from me. So that's how negative interest rate sounds. As a result, there is a feeling that this financial system is heading towards some kind of a crash, and cryptocurrency is an alternative. So these are the three reasons I think why most observers are confident that Bitcoin will end up becoming a safe haven asset, but only time will tell. I am quite skeptical that Bitcoin will immediately start performing as a safe haven for two reasons. First is, I am not sure we will see a wave of inflation over the next 2 years or so. Some economists believe that the amount of liquidity that Federal Reserve has pumped in over the last few months, it will bring inflation, and then Bitcoin will rise. However, history tells us that increase in money supply does not always bring hyperinflation. In fact, in 2009, they did similar quantitative easing and rate cuts, etc., and there was no hyperinflation. Prices rose, but it was in financial markets, so it was essentially asset price inflation and not economic inflation. And so, when you have asset price inflation, equities going up, there is less incentive for investors to look for alternatives like Bitcoin. Second reason is, I believe we are heading towards deflationary spiral, and right now there is a kind of complacency across the globe, especially investors the way stock markets have rebounded, it it tells me that investors are complacent and are expecting a V-shaped recovery in global economy. They think that uh, once the COVID crisis is over, everything will bounce back sharply. However, putting a country on a lockdown is much easier than restarting it, restarting the economy and bringing it back to the level that it was in December. It's going to take a lot of time. On top of that, we are already seeing massive job losses across the globe, and nobody knows how long these people are going to stay without job. So if there is, obviously, if I lose my job and I have no source of income, whatever cash I have, I would try to hold it, and I would not invest it in. The inclination to invest in stock markets or gold or Bitcoin or any other financial asset would be less. I would be less inclined to do that. So this is the reason I'm a bit skeptical that about this whole hyperinflation narrative and argument that Bitcoin will rally. That being said, historical data does tell us that after reward halving, Bitcoin tends to, especially in the following year, Bitcoin tends to rally sharply. For instance, in Bitcoin underwent its second reward halving on July 9, 2016. And in the following 4 weeks, it fell by 30%. I think it came down from $660 to $460. And after that, it steadily rose to record highs by March 2017. So if history is a guide, we are likely to see a Nike swoosh-like rise in Bitcoin after halving. So as our previous guest already talked, that market has already rallied in the run-up to halving this time. From March low, we are currently up right now more than 130%, I guess, or in fact 150%. So that's a big rally, and part of that rally is surely being fueled by bullish narrative surrounding Bitcoin. So I do expect that maybe we might see a wave of profit taking once the event is over. This is more likely this time as compared to 2016, because back then institutional participation was very low. This time institutional participation has increased, and you must have heard this strategy: buy the rumor, sell the fact.
Yeah.
Right. It's quite famous in equity markets or even in forex markets. So I think this strategy is more suitable to macro investors and institutions, and because their participation has increased in Bitcoin market over the last few months, I think halving might have been priced in to some extent, and we might see some profit taking once the event is over.
Wow, that's a brilliant perspective, Omkar. Yes, absolutely. I cannot disagree with you on those points. Yeah, we have a question from the audience, if that's okay.
Yeah, sure.
In cryptocurrency, the most important thing is the security issue. There is a great chance that Bitcoin market will be down if better alternatives are available. Do you think that?
Every cryptocurrency, I think, has I would say, different use case. Bitcoin's use case or the narrative surrounding Bitcoin, it is a safe haven asset, and it's a store of value. And its hash rate compared to other cryptocurrencies, Bitcoin hash rate or its network is more secure than any other cryptocurrency. Yeah. And so I don't think it will be that easy for any other cryptocurrency to just topple Bitcoin right now.
Yeah.
Especially if the safe haven narrative strengthens and the adoption rate goes up, I think the first to benefit from that is Bitcoin. And if it's interesting that if the adoption rate does go up and people start using Bitcoin as a means of payment for spending, it can actually end up outperforming gold. Because what will happen is, if there is a wave of deflation and people are using Bitcoin as a means of payment, what happens when in deflation is the purchasing power of your currency goes up. Like, for example, if I'm able to buy a single pen, let's say, just a hypothetical example, if I'm able to buy one pen with one Bitcoin, if there is a wave of deflation, the same single Bitcoin will give me 2 pence or 3 pence. So the purchasing power of my currency has gone up. In that case, Bitcoin will, I mean, its use case will go up and its value will also go up big time. It's
Yeah.
very difficult for other cryptocurrencies right now to topple Bitcoin.
But do you think without having any use case, Bitcoin can still keep going up in price? Because it's very difficult, right? Just like gold doesn't really have as such a use case per se. But do you think Bitcoin, following the same principle, just sitting there and demand and supply goes on, do you think like it
No,
can be more valuable in the next 10, 20 years?
no. That's a very good question. I think that is the risk to Bitcoin, because what is happening is rewards are being cut by 50% every 4 years. So essentially, miners' incentive is falling. At the same time, we don't have if we don't have a use case, the transaction fees will also keep getting smaller. So eventually, there will be less interest in mining Bitcoin. One of the analysts I talked to a few months ago made this point that halving is not necessarily a bullish event. In fact, it can be a negative event, because what is happening is miners' reward is being cut. At the same time, you have competitive cryptocurrencies like Bitcoin SV, whose block size is much bigger than Bitcoin. Even Bitcoin Cash block size is much bigger than Bitcoin. So they are able to process more transactions. So even
Yeah.
if their rewards are cut, because they are able to process more transactions, uh, the drop in the mining rewards is compensated to a large extent by a rise in transaction fees. That is not happening with Bitcoin. So you are absolutely right. If the use case doesn't go up, Bitcoin will suffer. That being said, I sometimes envision Bitcoin like a stock market index. So it's like, let's say, eventually it might end up becoming like Nifty. So it's just a gauge of what's happening in cryptocurrency markets.
Yeah.
So, it won't become extinct, but obviously, as you said, if there are no use cases, the price cannot simply keep
Yeah.
rising. That's right.
And how long do you see your vision to be coming to life? Do you have a time?
Vision about?
Your vision, like Bitcoin becoming like a Nifty index, do you think how long of a timeline it will take for it to get
Yeah,
there?
it depends. If they increase their block size, if they make necessary changes, then I think its use case will go up. But uh, uh, until then, I think it's difficult, because you have Bitcoin SV, Bitcoin Cash, who have a higher block size. Also, Ethereum's use case is
Yeah.
Ethereum has a strong use case, especially with the explosion of decentralized finance, and the way the demand and issuance of stable coins has gone up over the past 2 months. Uh, Ethereum's future from that angle is looking quite very bright.
I'm sorry to be like a devil's advocate, but I'm
No,
just gonna throw this question out there. Do you think like block size, increasing the block size is necessary? We have Lightning coming up probably in the coming future.
yeah,
I will probably, which would mean like there is no need for increasing the block size, and we already have BSV and Bitcoin Cash out there with larger block sizes. And yeah, is it really necessary to increase the block size in your opinion?
it depends if the if the drop in the mining rewards is compensated by some other factors, then we,
Right.
we may not need it. But the concern right now among few analysts that I usually talk to is that rewards are falling every 4 years, and uh, miners are not being compensated for that. And that is an issue.
Yeah.
So unless and until use cases don't go up, I think it's going to be difficult.
Right.
Maybe.
Yeah, Devraj Singh Rawat asks, how do we see impact on Bitcoin as more and more countries are introducing CBDC?
This is an interesting question. If let's assume that India or any other country they introduce their national cryptocurrency. So obviously, they would do everything in their power to make sure that other cryptocurrencies, which are not under their control, are banned in a way.
Yeah.
So we had this big rally in October when Chinese president announced support for blockchain. Bitcoin went from something like I don't know, from 7,300 or 500 to 10,000 in just 2 days.
Yes.
But that optimism was, I think, it was premature, because If they launch a national currency, I don't think they will allow Bitcoin to be traded or used as a medium of exchange, at least in their jurisdiction. The same is applicable for other nations as well. On the other hand, if you have national cryptocurrencies, Bitcoin's appeal as an anti-establishment asset will only strengthen. A Bitcoin specialty is that it is a decentralized setup. There is no governing body, and money can be transferred across borders very easily. This appeal will only strengthen if governments will launch their own cryptocurrencies. So net impact, I would say, would be positive.
Right. Yeah, that's a good way to look at it. Abhishek Shinde asks, gold itself has a value. Company share means ownership of the company's portion, but Bitcoin means demand and supply. Does Bitcoin has good future thinking in this way? Because you're not having any ownership in Bitcoin per se. For instance, like you have in stock market in companies.
Yeah, that is I mean, I agree to certain extent with that, given the current situation, because Bitcoin hasn't really penetrated the mainstream economy yet. However, once it penetrates in mainstream economy, holding Bitcoin would essentially mean you are having a claim over economy's resources, just like holding Indian rupee does. When you hold a 10 rupee note, let's say, or when anybody holds a 10 rupee note, it essentially represents a claim of 10 rupees in the resources in Indian economy. So you can, with those 10 rupees, you can buy X, Y, Z, anything. Same way, once Bitcoin enters into mainstream, I think it will, this problem will be addressed. Right now, because its usage is not, very limited. It does tend to create a picture that it's just demand and supply kind of thing, and it's different from shares or gold, etc.
Right. Vikas is asking, when did the financial overhaul happen last time like this? The financial overhaul that you talked about safe haven. When was the last time something like this ever happened? I don't think so. It
I
has
think
ever.
the banking sector was reformed. Maybe I'm not sure. I'm just
Yeah.
making a guess. Maybe somewhere between World War One or World War Two or after World War Two. That's the last time I think big banking reforms happened. But overall financial structure did go change in I think 1971 when United States gave up gold standard.
Yes, exactly. Yeah. That's when they allowed to print as much money as they like
Yeah,
out of thin air. And
otherwise, this is
like
not.
I mean, yeah.
Yeah,
Yeah.
please go ahead.
Yeah, I was just saying, like after that, we are just trusting the paper money on the government's promise. Before that, we were like, okay, there's some commodity backed by it, but right now it's just they can keep printing. But Omkar, there's one question that I think one of the panelists raised a couple of hours ago, that in such crisis that we are in, COVID situation, governments are being able to help the people, like they're able to release the stimulus and everything. If we envision a world where cryptocurrencies and Bitcoin are the superior currencies, and they devalue dollars that all the like we think in the next 50, 60 years, how do you think in that scenario people who are in the need, unemployed, will be able to be helped without any fiat currency at all in the system?
No, that I agree. So, and that's why it's my personal view that uh, I generally do not agree with people who say cryptocurrencies should replace governments or fiat currencies.
Right.
I think this is my personal view that I think we need a parallel system. So we have, fiat currency system as well as cryptocurrency system, and both will keep checks and balances on each other, and both
Right.
will work in tandem. That's a logical question that your guest asked. That if fiat currencies are replaced and everything is being run with cryptocurrencies, and if we have a COVID-like situation, what will happen to poor people? Because obviously they would be having wallets. That's what he's assuming, right?
Even if they have wallets, like we'll have to. I don't know how will they get bitcoins and go about their lives. There has to be a government authority there to be
Yeah,
printing money for them in a way. I think. Yeah.
right.
We have a question.
Yeah,
Sorry.
please.
Yeah, I'll just invite him. Yeah. Devraj Rawat. Hi, Devraj. Do you want to ask your question? Devraj, are you there? You want to ask your question? Are you there? Okay. Never mind. Sorry about that. I
No.
think there's some connection issues. But yeah, like you said, and I totally agree that that Bitcoin and cryptocurrencies cannot just topple down the governments, cannot just topple down the banks and the entire ecosystem that has
Yeah.
centuries built.
Yes.
Yeah,
Like some of the people who are, they are diehard Bitcoin fanboys, or
you might be offending some right now.
no, no. I'm sorry if I'm offending anyone, but what I'm trying to say here is that many people argue that the cryptocurrencies would eventually or should replace governments, but they are forgetting that government does not essentially means political leaders, etc. Government is essentially an establishment which controls money or medium of exchange. So if tomorrow cryptocurrencies topple fiat currencies, essentially cryptocurrencies would become governments, right?
Yeah. Well, if you
So
think it like that, yeah.
so how can anyone guarantee that, let's say, if I run a cryptocurrency project, and if I have my own cryptocurrency, let's say by name Omkar, and if I topple fiat currencies, how are you going to guarantee that I won't do everything wrong, which is supposedly being done right now by governments?
Yes, exactly.
So I
Yeah.
think we need parallel systems which will keep checks and balances on each other, instead of going to extremes like crypto should not exist or fiat should not exist.
Yeah, I agree definitely. Yeah, Omkar, just one last question that I've been asking everyone. That says the halving is upon us. What a great time to have a conference. And there is more interest because there's more buzz around it. I want to know how do you view this halving? What's your perspective, and especially with regards to price of Bitcoin and other altcoins? How do you think that if it's going to impact, or if at all?
I think the first thing that I would like to say is, in my experience, it has been my experience over the last 10 years, that when something becomes a common knowledge, no, almost always it is priced in advance. In 2012, if you look at historical data, after its first halving, Bitcoin rallied by 7%, remained flat, and then kept on rallying. So essentially, there was no correction. The reason I think is because back then, crypto market community was very small, and it was dominated by believers, people who believed in the idea of Bitcoin, and obviously they cheered the first supply cut. However, in the second halving, if you see, a price rallied sharply in 2 months leading up to the halving event, and then fell by 30% in 4 weeks, following 4 weeks, and then again started rallying. This time, if you see, the halving has been extensively discussed. Uh, as far as Coindesk is concerned, first article on 2020 halving and its potential impact on price was published on December 31st, 2018. So
Wow.
it's like 15, 16 months, I guess, in advance. And since then, consistently, this has been discussed. And every analyst, like especially over the last month or so, my inbox is full with analyst quotes about how Bitcoin is going to be great for halving is going to be great for Bitcoin's price. So it's discussed so much, and almost everybody is aware now that something called as halving is going to happen uh, in May 2020, and it will have a bullish impact on price. If you look at the data, open interest on Chicago Mercantile Exchange, futures listed on Chicago Mercantile Exchange, it has risen sharply over the last 1.5 months, and it recently rose to record high. I guess just on Thursday. Open interest in option market also rose to record highs yesterday. So the popular belief in crypto markets is that the CME open interest is a proxy for institutional activity. So you have institutional whose participation has gone up. Retail participation has definitely gone up. If you look at the number of addresses holding less than zero point 0.1 Bitcoin or greater than zero point 0.1 Bitcoin, it has surged. So you have retail participation going up, institutional participation going up. Number of addresses holding more than 10,000 Bitcoin has also increased. And the increase has been particularly sharp since mid-March. This is important because in mid-March, price had dropped to 4,000. So what this tells us is that most investors utilize the dip. They bought Bitcoins on dip, most probably on the narrative that it will rally sharply after halving. So when you have so much of activity, surge in activity ahead of halving, there is a strong possibility that we might see a correction.
Right.
That being said, the macro narrative is quite different this time. In 2016, global economy was in much better shape. Stock markets were doing well. In fact, in July 2016 itself, I think there was some turnaround in Chinese data. It showed, a positive turnaround in Chinese data, and stock markets began rallying in July 2016. Same time when Bitcoin underwent its second halving. So back then, there was less incentive for investors to look for alternatives. This time, due to COVID and unemployment and crash and deflationary fears, there is strong incentive for investors to look for alternatives, especially with legends like Paul Tudor Jones.
Yes, absolutely.
Comparing Bitcoin with gold, I think any dip, most analysts I have talked to over the last few days, they say that any post-halving dip will be short-lived.
Yeah, I think we'll wrap up here, Omkar. Thanks a lot for your time. It was a great discussion. And I mean, it really, I'll see you backstage. Yeah.
Yeah.
Okay.